So today guys, I want to bring you back to the basics and talk about personal finance. So I'm going to be walking through exactly what I've learned, and I'm also going to be sharing the key steps that I've considered to really deal with my money. And for me, there are 4 key principles that I've really been focusing on, and it's actually helped me through my finances. So I'm hoping it will do the same to you as well. Hello, welcome back to my channel. My name is Veronia, and on this channel, I talk about all things to do with money, your career, and having a positive mindset for success. So if that does sound great to you, then be sure to subscribe to my channel and hit the bell notification below so you don't miss out on any new videos. Now, the reason why I decided to do this video is because I actually received a message from someone, and they were really interested in just knowing the core basics of personal finance, mainly because they're not originally from the UK. So they really wanted to know exactly what you should be doing when it comes to financial planning. And then I thought, actually, it's not just international people that are probably asking this question. To be honest, I gather that most people are asking the same thing. So I thought I may as well take the opportunity to do a video and go right back to the basics. Remember guys, Auntie V's got you. So there are 4 key principles that I continue to focus on each day. And that's basically spending less than I earn, avoiding high interest debt, protecting my finances, and making my money work for me. So what do these principles actually mean? Well, let's dive into all of them in a bit more detail. So let's talk about the first one, spending less than I earn. Basically, that means that my outgoings shouldn't be exceeding my incoming. So essentially, I need to be spending less than what I make in a month. So if your income is £2,000 a month, you can't then be spending £2,500 by the end of the month. Veronia, have you not heard of YOLO? I'm young, I need to enjoy my life. Now, I'm not saying to be cheap and not have a life. I'm just saying that if you do earn £2,000 a month, ideally you want to spend less than that. There is no point in spending more than you can afford, because you're gonna end up paying for it in the long run anyway. So the second principle, avoiding high interest debt. Now, a lot of you guys will know how I feel about high interest debt. It's expensive, it's not worth it. Please guys, avoid it at all costs. You are not going to build wealth if you're racking up credit card debt. Plus guys, the interest you could be paying on credit card debt, I'm talking double digits. And it's a lot worse if you're using the debt to buy a liability, because that's not making you money, that's costing you money. Okay, so I can either buy the Toyota in cash, or I can get that BMW and only pay £500 a month for the next 5 years. Decisions. Guys, cash is king and queen for a reason, just saying. So the third principle, having financial protection. Now, you guys will know that I preach about having an emergency fund. Again, most experts would say ideally you want to have about 3 to 6 months worth of expenses. It's going to be different for everyone depending on your situation or your risk tolerance. So I would just do what makes you comfortable. Yeah, hello? My car did what? Blew up where? All right, fine, how much? Yeah, so I probably shouldn't have spent my emergency fund on a trip to Ibiza. Yeah, and also remember that emergencies are for actual emergencies. Also, I would be researching on life insurance because that is equally important. Now, I don't want to go into too much detail because I'm not really an expert in that field, but there are going to be different policies depending on your situation. So for example, if you've got dependents or not. So definitely make sure you're doing your research on that. But guys, personally, I do think it's probably one of the most important principles, because you never know when a crisis will happen. I mean, look at 2020. Now, the fourth principle, again, is probably one of the most exciting ones, but it is making my money work for me. And by that, of course, I do mean by investing. I'm not even gonna lie to you guys, it is really difficult to build a large amount of wealth if you just end up leaving your money sitting in a bank account. Now, being aware, I'm not talking about your emergency fund or your short-term goals either. So for example, if you're saving up for a deposit for a house, or you're saving up for a wedding or a car or holidays, then most experts would just suggest you keep it in a high interest savings account. But if you're focusing on retirement or anything long term, so for example 10 years or longer, then for me investing is definitely a good option. Now again, I'm not a financial advisor, so I'm not telling you what to do, but of course I'm going to share with you how I plan to build wealth and what a lot of other people will do to build wealth as well. But by investing that money, you're actually making that money work for you. But do remember, investing does have risks. You're not always guaranteed to make money. You could even lose money as well. But I definitely don't think it should stop you from investing. I would always educate myself and also identify my risk tolerance. Okay, Veronia, these principles are great, but where do I actually start? Well, now I'm going to share with you the exact steps I've taken to really plan out my finances. So hopefully you can use this as inspiration, and I'm really hoping it does give you some good guidance. So the first step is that I actually set my goals first. So before I even started paying off my debt and investing, I decided that the first thing I needed to do is know exactly where I want to be, because I do think it really helped with my motivation when it came to things like like paying off my debt. So I would really encourage you to think about your why. What are you doing this for? And then there were a few long and short-term goals that I really wanted to achieve. So focusing on things like, when do I want to retire? When do I want to be financially independent? So I'm able to have my expenses paid for through passive income. How much will I need to retire or be financially independent? I also needed to think about, realistically, how much can I save and invest? And if I have debt, when do I want it paid off? So I really thought about the bigger picture in terms of retiring and being financially independent, but then I also had small goals as well. So I had a goal on when I wanted to pay my debt off and how much I would be putting towards my debt as well. And also goals around how much I wanted my emergency fund to be and how long it would take me to save up for that too. So I would really encourage you guys to do that and make sure you do write it down. So step 2 for me was making a budget. Again, you want to tell your money what to do and where to go. Now, if you are new to my channel, I do have a couple of budgeting videos that really goes into detail how you can actually budget your money. And it also talks about the different strategies that you can use, because there's not going to be just one method that's perfect for everyone. But again, most of you guys will know that I do preach about budgeting as well. So if you've been watching my videos for a while and you still haven't made a budget, why not? Come on guys, it is important. Step number 3 is that I made myself a mini emergency fund because I had high interest debt. Now, some people would prefer to have a fully funded emergency fund before they pay off their debt, but again, it will depend on your risk tolerance. So I decided to have a mini one just in case something happened, like my car broke down, because then it meant I could use my mini emergency fund as a buffer, which then would have stopped me from getting into even more debt. So then step 4, which I'm sure you guys wouldn't be surprised, was actually paying off my high interest debt. So you guys will know I threw everything at it. I didn't go on holidays, I hardly went out to eat, plus I became a lodger. That is how much I wanted to pay my debt off. And I got a lot of that motivation from Dave Ramsey. So if you guys don't know who he is, he's actually a big influencer in the personal finance world, particularly in the US. And a lot of his videos and his books are really based on paying your debt off and throwing everything at that debt. And he basically says you can't be eating out until you pay off that debt. Plus you need to be selling everything that the kids even think they're next. So yeah, he really helped me to pay my debt off, to be honest. Again, I do have a couple of videos on how you can pay off your debt, so I will be sure to put those in the description below. Step 5 was then saving for a fully funded emergency fund. So once I paid my debt off, I literally put all of that money towards my emergency fund. Again, some people might choose to do it before they pay off your debt. It really just depends what you're comfortable with. And if you don't have any high interest debt, then you could just go straight into building a fully funded emergency fund. Then in step 6, I was also contributing to my pension at the same time. And with that, I also got an employer match. And I found this quite helpful because it meant my employer would just take the money out of my payslip, so I didn't physically have to do anything. And if you don't know what a pension is, it's basically a fund or a pot, I would say, where money is basically added when you work. Then once you eventually retire, you can then draw down from that pot. And it can be useful because some employers will match your contribution. So for example, if you decide to put 5% of your salary into your pension, your employer might also put in another 5%. So I do think it's a really good way to get started. Obviously, you'll need to do your research and also check with your employer what they offer. And if you're self-employed, then don't worry, because you could use a SIPP instead. And that basically stands for self-invested personal pension. I probably practiced that 3 or 4 times before I got it right. But basically, a SIPP will work in a similar way to your standard pension. Now, I'm definitely not a pension expert, but Money Saving Expert does have good information around pensions, so I'll be sure to put a link in the description below. Now, in terms of pension, some people might prefer to actually contribute it before they pay off their high interest debt, just because if you do have an employer match, that essentially is free money. But again, it will depend on what you prefer. So for example, in my case, I was contributing to my pension before I got my car loan, but then I did pause it briefly because I just wanted to chuck as much money to my debt as possible. So again, it really depends on what you're comfortable with. So step 7, which is the last thing I'm doing, is saving money aside for short-term goals, but also investing like crazy. So again, most of you guys will know that my main focus is going to be on the stock market and property as well. And don't worry, I haven't forgotten, I am going to be talking through my investment plan next week, as well as a small announcement. So do make sure you are subscribed to my channel to see more. Now, I would definitely say investing in the stock market is great, especially if you are a beginner. So I'll definitely be talking through how I'm investing in the stock market, because I would also consider myself as a beginner. Now, when people invest through the stock market, most people will actually do it through an ISA, and that basically stands for an individual savings account. Now, there are a few types, but if you're looking to invest in the stock market, then most people would be looking to use a stocks and shares ISA. And basically, it's just a tax wrapper. So it basically means if you do get an income or capital gains from your investment, If it's within the stocks and shares ISA, you won't need to pay tax on that. So essentially an ISA is a savings or investment account that you don't need to pay tax on. Now there is an allowance, so you can save or invest up to £20,000 per tax year, but for a lot of people that is enough. And then when I'm talking about short-term goals, I'm including things like saving up for a wedding, for example. Again, if you're looking to invest, I do have a video on how you can actually invest as a beginner, so of course that video will be in the description below. I also think I will do a separate video just to explain it in a bit more detail, because I feel like I've spoken enough today. But hopefully these steps that I've shared will give you good guidance so that you can really start to focus on your own finances. So if you did like this video, then please do give me a thumbs up, as it really does help to support the channel. And I would also like to know, what step are you currently on? I do post every single Friday, so if you would like to know more, then please do subscribe to my channel. And again, I will see you next week.